Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Monday, February the 2nd, 2026, and it's my uncle's birthday. I got to make sure I call him today. And today we are recapping week 3 of Florida's legislative session, which ran from January the 26th through the January the 30th. And if week 1 and week 2 were about getting bills filed and tested, week 3 was about something very, very different. Week 3 was about friction. This is the week where debates stopped being polite, committee rooms got louder, and lawmakers started realizing which insurance bills were going to glide through and which ones were going to get pushback. So today's Quick Bite is a reality check. We're going to talk about what actually moved last week, what stalled, what all of this means for homeowners, drivers, and insurance costs in Florida. Let's jump in. Week 3 was high activity week in Tallahassee, especially for insurance related legislation. And again, legislation session is not just about insurance bills, but of course, because insurance is my business, I'm focused only on the insurance bills that affect my customers and affect my business. So those are the ones that I'm going to bring to you in these episodes. But if you want to know about all of the bills that are going on, I'm quite sure there's other like channels or other people that are discussing it. But me, I'm just focused on the insurance related bills. So several major bills hit committee floors. Some passed with momentum, others hit speed bumps, and a few sparked debates that are going to carry well into February. What matters most is that not just whether a bill passed the committee, but why it passed or why it stalled, because that tells us where it's really headed. Let's start with the bill that generated the most heat. House Bill 1157 and Senate Bill 1396 deal with something called litigation financing. This bill is really interesting to me. Also known as the lawsuit lending. This is when outside investors fund a lawsuit in exchange for a cut of the settlement. Remember, it's been a few years, but there was a lot of commercials about, hey, you got a pending lawsuit, call us, we can help you get money now, need money now, or something was the slogan on those commercials. Remember those? That's what this is. Last week, Senate Bill 1396 passed the Senate Judiciary Committee, and it did not do so quietly. The vote was 8-2, but the debate leading up to it lasted about 25 minutes and exposed deep divisions. Supporters of the bill framed it as a transparency and sovereignty issue. Senator Colleen Burton, who sponsored the Senate bill, emphasized that Florida courts should not be influenced by hidden investors or foreign sovereign wealth funds. And that's interesting to me. I always thought it was just, United States companies that were doing this or investors, hedge fund groups that were doing it. I did not have any idea that maybe it was foreign investor funds that were really involved in this. So that's really interesting to me. Colleen argued, the senator, she argued that the state has a right to know if outside money is steering lawsuits that impact Florida businesses and insurance markets. Representatives from the U.S. Chamber of Commerce supported that view. One witness argued that some investors treat lawsuits like a casino, pushing cases to drag on longer and settle for higher so they can maximize their return. He cited research suggesting that excessive litigation costs add roughly $600 per year to the average American household in the form of higher prices and insurance premiums. Legal reform advocates also support the bill, arguing that it protects the attorney-client relationship. Under this proposal, a financier would not be allowed to veto settlements, choose expert witnesses, or control legal strategy. Opponents strongly disagree, and can we all guess who's the number one opponent of this bill? You guessed it, class, trial attorneys. They argue that forcing plaintiffs to disclose they have litigation funder gives insurance companies a strategic advantage. They claim it signals that plaintiffs may be short on cash, which could lead insurers to delay cases or push lower settlement offers. They also pointed out that the bill does not require defendants, including insurance companies, to disclose their own financial backing, such as reinsurance or corporate parent support. In their view, that makes the bill one-sided. I 100% disagree with this. Everyone pretty much knows that insurance companies have reassurers that come into play, that every insurance company has some type of reinsurer insurance. Also, everyone knows that if there is a parent company, a lot of times the sub companies under the parent company do get financed between the companies, between the parent company and the lower companies. So that's not a strong argument to me. Everyone kind of knows that. Also, the fact that the other argument was that they're going to delay claims. They obviously never been a claim representative, but let me tell you, I was a claim representative for 5 years handling complex type injury claims. You have at least 100 claims on your desk at any time, 100 plus. You don't want to be delaying on closing a claim. The quicker you can close a claim, that's the goal. You want to get the claim settled, get your insured released, and close your claim, because when you close that one claim, you got about 2 more coming in its place. So you don't have time to sit there and delay closing claims. So that's not true. Perhaps the most emotional argument was about access to justice. Critics said many Floridians earning under $50,000 a year rely on lawsuit funding to pay rent and medical bills while cases pending. I don't know if I so much agree with that either, because usually the attorney is handling a case on a contingent basis. So all of those litigation fees are just all handled on a contingent basis. Secondly, medical bills, usually the doctors, I've seen it, where they don't get payment right away. They know it's a settlement going on. They work a lot of times with the attorney. So they wait till the settlement is over, and then they negotiate based on what the settlement is on their bills. So I don't know about that one. So the critics also say without it, they argue some people may be forced to abandon litigation claims altogether. Not true. What was happening before, when there was none of this, extra money or loan on your settlement? What were people doing before? So it's not going to collapse because you take that away, because that's still a newer phenomenon. Despite the opposition, the bill passed and now moves to the Commerce and Tourism Committee, which means this conversation is far from over. From an insurance standpoint, this bill matters because litigation costs directly affect premiums, 100%. The longer cases drag on and the higher settlements climb, the more pressure insurers feel to raise rates. 100%. That's a 100% accurate statement. Now let's talk about the bill that might be the most talked about proposal of the entire session. House Joint Resolution 209 proposes a $200,000 property tax exemption for homeowners who maintain insurance coverage. Remember, this is the one I'm watching the closest. This is really interesting to me. I want to see how this one is going to go. Last week, this bill cleared its final House committee, which means it is procedurally ready for a full House vote. But that does not mean it's without controversy. Local governments have organized significant opposition groups like the Florida League of Cities and the Florida Association of Counties, arguing that the exemption could cost local governments between $6.6 and $8.6 billion per year in lost revenue for non-school services. Cities like Jacksonville Beach, Miami-Dade, Coral Gables, and Manatee County have publicly raised concerns. Officials warn that if the property tax revenue drops while public safety budgets are protected, the cuts will fall entirely on services like libraries, parks, senior centers, and road maintenance. And here's where it gets interesting. The bill includes a provision that prevents local governments from cutting funding for law enforcement and first responders below their highest levels from 2025 or 2026. Cities argue that this creates a budget trap. If property taxes drop and police budgets are untouchable, everything else becomes vulnerable. To soften that opposition, lawmakers added a 5-year sunset provision. This means the tax break would be studied after 5 years, and if the impact on local services is too severe, the exemption could be modified or repealed. Despite the pushback, the political reality is this: lawmakers believe property tax relief is a winning message heading into 2026 election cycle. Representative Demi Busada Carabra, the bill's sponsor, has taken a very different approach in defending the proposal. She argues that local governments need to examine wasteful spending and that homeowners deserve a rebate for doing the responsible thing by maintaining insurance. She also framed the bill as a resilience incentive, arguing that tying tax relief to insurance coverage helps stabilize the housing market after major storms. And when critics cite the revenue loss, she leans into the process, reminding everyone that this is a constitutional amendment that ultimately goes to voters. In other words, the fight is far from over, but momentum is clearly on the bill's side. Just to add a little bit more to this, I did not know it's just an amendment that still has to be voted on by the populace at large. So that's interesting to me. I didn't know that even if it passes legislation, they do approve the amendment, it still has to go on the ballot and voters still have to vote for it. And just a conversation I had last week with a customer, they did bring this up. They did bring up the fact that what will happen to the budgets if you're cutting that much out of the budgets for the cities and the counties and the municipalities. Where are they going to get the money from? So that is an interesting other side of the coin. Again, that is an interesting bill that I am following because I just really want to see how that one shakes out. Not every bill last week involved raised voices. Senate Bill 202 and House Bill 527, and I really believe this bill is just going to fly through. This bill regulates the use of artificial intelligence, and insurance claims continue to move smoothly. I don't think this bill is going to have any type of hangups. Last week, House Bill 527 moved to the full House calendar, and there is very little opposition on either side of the aisle. The reason is simple. The bill does not ban artificial intelligence. It simply requires that a human being review and sign off on any claim, denial, or reduction. This has been one of the most bipartisan issues of the session, largely because it aligns with common sense. Technology can assist, but accountability still rests with the person. From a consumer standpoint perspective, this bill reinforces transparency and trust in the claims process. I 100% support this bill. I would not want my customers' claim to be denied based on just strict AI. A lot of times, I don't believe AI can really recognize nuances, a lot of nuances in the kind of color, right? You only can train the AI to review the policy, and based on the policy language, black and white, they, kind of just go off of that. But as we all know, in insurance, it's a lot of nuances. It's a lot of color. It's not just black and white. It's a lot of color that comes into that. And I just think a human should always sign off on a denial or a reduction in a claim. It should not be strictly AI. So I 100% agree with that bill. Now let's talk about what did not move last week. And this one was interesting to me. Senate Bill 522, which proposes repealing Florida's personal injury protection system. It stalled. It stalled in the Banking and Insurance Committee. The snag game came down to a disagreement over medical payments coverage. Some senators want to require $10,000 in MedPay coverage if PIP is repealed. Others argue that doing so undermines the goal of lowering auto insurance rates. Until that disagreement is resolved, the bill is likely to remain parked. This does not mean the bill is dead, but it does mean it probably will not move again until later this month. That's the craziest argument that I seen that was when I was researching this. Doesn't make any sense. So you're moving the PIP to medical payment coverage essentially. So you're taking away the word no personal injury protection and just moving it to medical payment coverage. The problem with that is medical payment coverage pricing is already based on, other factors. So now you're just moving PIP to the medical payment coverage, which is now going to increase the rate for that coverage because you're moving all of the liability from that coverage to medical payment coverage. So now the rate for that coverage, the pricing, has to be what PIP was because you're just moving it. So it doesn't make any sense. So either you're going to repeal PIP and require everyone to have bodily injury coverage, or you just might as well just keep it. You shouldn't transfer it right to medical payment coverage because it's not going to affect anybody's rates. That doesn't make any sense. So what does all of this mean if you own a home or drive in Florida? It means insurance costs are being shaped not just by storms and claims, but by legal structure, tax policy, and accountability measures. Some bills are clearly moving toward passage. Others are being readjusted, and a few are setting the stage for long debates that will define the rest of the session. The biggest takeaway from week 3 is that Florida lawmakers are no longer just talking about fixing insurance. They're arguing about how to fix it and who bears the cost. I will continue to monitor these bills very closely. I'm really interested. This is really interesting to me, especially as they move to the floor votes and pick up late filed amendments that can change everything very quickly. If today's Quick Bite helped you understand what really happened during week 3, now is a great time to stay proactive with your insurance planning. To request a quote or insurance policy review, please visit our website at isominsurancegroup.com. And again, it's right below me in this video. And remember, legislation moves slowly until it doesn't. Until it doesn't. And, you always want to be prepared instead of reactive. If you found this episode helpful, please like this video, share this video with your friends, your family, your neighbors, and subscribe as well. Please subscribe to my channel as well so that you get the notifications of when a new video drops. And please drop comments below with any questions or any topics you would like for me to discuss in an upcoming video. As always, Quick Bite episodes drop Monday, Wednesday, and Friday at 2 p.m. Eastern. And as we all know, this video is for educational purposes and should not be taken as legal, tax, or specific insurance advice. Please consult your licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. It hasn't been so sunny this over the weekend and now until Monday. We've been cold. And, cold for us is not cold like it is up north, by no means, but it's been cold. Thank you for watching. I'll see you next time. Please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.